Welcome to today's earnings deep dive into IBM's Q4 2025 performance. We'll dissect the key metrics, performance drivers, and future outlook. Remember, this is purely for educational purposes and should not be considered investment advice. Revenue surge. IBM reported Q4 2025 revenue of $19.7 billion, a significant 12% increase year-over-year, YOY, or 9% in constant currency. EPS beat. The company's non-GAAP EPS reached $4.52, surpassing estimates by 23 cents. FCF growth. Full-year free cash flow, FCF, hit $14.7 billion, a substantial $2.0 billion increase compared to the previous year. Margin expansion. IBM's full-year GAAP gross margin improved to 58.2%, up 150 basis points YOY. We'll explore how these numbers translate to IBM's overall health and future prospects, while keeping in mind that this analysis is for educational exploration only. Looking ahead, IBM's management has provided optimistic guidance for 2026 and strategic shifts. Revenue reached $19.7 billion, representing a 12% YOY increase, 9% constant currency. Full-year revenue climbed to $67.5 billion, up 8% from 2024, 6% constant currency. Software segment. The standout performer was the software segment, boasting a 14% growth rate. This was driven by AI initiatives like watsonx, Red Hat subscriptions, and OpenShift platform adoption. Infrastructure segment. Infrastructure also showed strength, growing by 21%, propelled by robust mainframe sales, IBM Z up 67%, and hybrid cloud solutions. Consulting softness. While consulting experienced softness, it was somewhat offset by AI-related signings. However, enterprise spending caution impacted discretionary projects in this segment. AI momentum. The generative AI book of business reached $12.5 billion, up from $9.5 billion in Q3, indicating strong demand for AI solutions. This fueled software and services signings, with a mix of 1/5 software and April 5th consulting. Margin improvements also played a crucial role, with gross margin expanding to 58.2% for the full year, up 150 basis points YOY. This was due to a shift towards higher-margin software and subscription models, as well as consulting services, which offset service labor inflation. Looking ahead, IBM's management has provided optimistic guidance for 2026 and strategic shift. Revenue growth. The company projects revenue growth exceeding 5% in constant currency, with an additional 0.5% tailwind from currency. FCF increase. IBM anticipates a roughly $1 billion YOY increase in free cash flow, FCF, from 2025's $14.7 billion, targeting approximately $15.7 billion. Analyst projections. Analysts anticipate modest organic revenue growth of around 5%, with constant currency growth at 4.4%. EPS growth is projected at 8%, and free cash flow is expected to exceed $15 billion. This guidance is underpinned by the durability of IBM's AI and software offerings. IBM's focus on AI leadership and measurable business impact suggests a confident outlook for the coming year. Executive sentiment is largely positive, emphasizing AI orchestration, governance, and data resilience. Here's a balanced investment thesis first, with analysts revising their estimates based on the latest earnings report. Valuation multiples. IBM's current valuation metrics are elevated compared to historic, particularly through its. The normalized PE stands at 26. The company's strong software and infrastructure segments, combined, the implied forward PE is approximately 34.4, based on a price of around $293 and a TTM EPS of $8.53. EPS beat. The company's non-GAAP EPS reached $4.52, surpassing estimates by 23 cents. Evercore ISI has an underperform rating with a price target of $330, reflecting concerns about market optimism without formal 2026 guidance and demonstrated margin expansion. Peer comparison. IBM's current PE exceeds peers like Accenture, 20.77x, and Oracle, 25.35x, indicating a relative premium. However, IBM's ROE, 38.7%, outperforms Accenture, 33.79%, but trails Oracle, 95.17%. These valuation metrics reflect AI momentum. Q4 revenue plus 12% YOY. GenAI booked $12.5 billion, and 2026 guidance, greater than 5% constant currency rev growth, plus $1 BFCF. However, models cap upside due to modest projected growth. Here's a balanced investment thesis for IBM, considering both opportunities and risks. Valuation multiples. IBM's current valuation metrics are elevated compared to historic, particularly through its. The normalized PE stands at 26. The company's strong software and infrastructure segments, combined, the implied forward PE is approximately 34.4, based on a price of around $293 and a TTM EPS of $8.53. Bear case. Execution risk on software margin expansion remains a key concern. Converting AI bookings into durable, high-margin software revenue streams is unproven at scale. Additionally, consulting softness and potential macroeconomic headwinds could impact revenue growth. Foreign exchange headwinds are also material enough to warrant separate disclosure. In conclusion, IBM's valuation premiums limit near-term upside amid modest projected growth, 1.2% annualized to 2029, favoring income over momentum plays. A neutral stance is warranted for swing trading, with a hold recommendation for dividend, 2.28%, and stability. Remember, this analysis is for educational purposes only. This is not investment advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Key metrics to watch going forward include AI bookings conversion rate, software segment margin expansion, free cash flow generation, and infrastructure revenue trends.